Hello everyone, welcome to the AGS Knowledge Arena. So today we are going to discuss some basics of accountancy. So in today's session we will discuss about bookkeeping and accounting. What is bookkeeping? What is accounting? The evolution of bookkeeping and accounting. Comparison of bookkeeping and accounting. So what is similarity, or I would say what is distinction between the bookkeeping and accounting? So generally we use this term interchangeably, but still there is some difference, so we will discuss that. Apart from this, we will also discuss some important terms that we use every now and then while studying accounting, and some of them we will explain in detail. Now, moving to bookkeeping and accounting. So before proceeding, I would like to remind you, if you have not subscribed the channel, so guys, please subscribe it and do press the bell icon so that whenever a new video is uploaded, you get a first hand information on that. Great. Now let's start with bookkeeping and accounting. So what is bookkeeping? So bookkeeping is defined as a process of recording, keeping full documentation of every financial transaction in a systematic manner. So what does it mean? So it means that whatever transactions are happening within a business, we are recording those transactions in the books of account, and we are keeping a complete documentation of every such financial transaction. So that is termed as bookkeeping. And accounting is somehow a bit advanced stage or advanced level of the bookkeeping, whereby we classify, summarize, and interpret the financial transactions in a significant manner. Okay, so if you can see here, we have, sorry, just doing it. Okay, so here you can see we are preparing a trading and profit and loss account, right? So this preparation of trading and profit and loss account, or for that matter, a balance sheet account, sorry, a balance sheet, not account, but a balance sheet. So this is termed as accounting. So here what we are doing, whatever is being recorded in the books, we are analyzing it, we are getting a information from a data. So information is trading and profit and loss account, which shows how much gross profit we are earning, how much net profit we are earning, or per se gross loss or gross or net loss, whatever the case be, and the position in balance sheet as of what are the various assets that we hold and what are the various liabilities that is due by us or the business. Okay, so this is accounting. Now, evolution. So accounting is not a very new term, or it's not a new practice. So we trace it back to the period of Chanakya, yeah, who emphasized in his Arthashastra the existence and need of proper accounting as well as auditing. So this is very old concept. So over a period of time from Chanakya's time till present date, a number of things has happened. It has evolved from there, and now it's like very much advanced and very much advanced version of what we were practicing earlier. Yep, so now let's talk about the comparison between bookkeeping and accounting. Okay, now let's begin with the definition, as we have just read about it, that bookkeeping is the process of recording and maintaining document of financial transaction, while accounting is actually the classifying, interpreting, and reporting the financial transactions in a meaningful manner. The objective of bookkeeping is to record every transaction, so whatever financial transaction, so whenever we talk of transaction here, we talk of the financial transaction. So whatever transaction happens, any financial transaction happens, we have to keep a record of that. From that record, and in accounting, what is the objective? From that records, from all those records, we have to analyze those records, the numbers, and then we have to prepare certain financial statements or reports which we have to communicate to the relevant stakeholders. So stakeholders means government, persons who have invested the money in the company, and so on and so forth. So decision making, we cannot make any major decision on the basis of bookkeeping, because what is bookkeeping is just keeping the records and it's just a data, right? So what we need for the decision making is information. So the meaningful interpretation analysis, which is an information which is done by the art of accounting, right? So accounting is something that helps in decision making. Then now who does it? It's a bookkeeper who does it, and it's an accountant who does it. Accounting. So what is it? It is a so bookkeeping is a part of accounting process, and accounting is basically a language of business. So if we have to talk of a business, we talk of its accounting, the interpretations, the results. So if we talk of any company, say Reliance Industry, what we say? We just say, we don't know whatever business it is doing or not doing. How we come to know? We come to know only of because from interpreting and analyzing its financials. So whatever profit and loss account, balance sheet it is publishing, we get to know the health of the business from that, how good business is or not. So this is a language of business. Then next is methods. So in bookkeeping we have single entry bookkeeping system, we have double entry bookkeeping system, while in accounting it is majorly financial accounting, cost accounting, and management accounting. So these are certain topics which we will discuss later on, not at this stage. Then financial statement preparation process. So financial statements are not prepared as a part of bookkeeping process, as we discussed just before, that bookkeeping is just recording of the transaction and keeping the documents of all the financial transactions. So we are not making any financial statements in bookkeeping. So in accounting, yes, it is a part of accounting process. So preparation of financial statements is a part of accounting process. Now if you can see in the diagram below, let's see the diagram here. Yeah, so what it says here, it is accounting and bookkeeping. So bookkeeping is a subset of accounting, right? So if you can see in bookkeeping here in this space, what is it? So in bookkeeping we do purchase books, sales book, or we maintain purchase book, sales book, purchase return, sales return book, cash book, ledger, and journal entry rather, and then ledger preparation. So this is all part of bookkeeping. So we are maintaining these records. And then comes to accounting. So what accounting is? Accounting is the analysis. So by accounting we mean preparation of trial balance. What are our assets, liabilities? We come to know from there. What is profit and loss, P&L here, right? So this is the statement from where we come to know, okay, whether the business is making profits or losses. Then this balance sheet. So balance sheet is the state of business, what are the various assets that a business holds, and what are the liabilities that a business has to pay, and other information and reports that is used by management for various other purposes. So we call as management information reports. Okay, so now moving to next part, which are the important basic terms. So here you can see a lot of terms we have written, like income, expense, gain, losses, assets, single entry book system, double entry book system, cash system of accounting, accrual system of accounting, which is very important to know. Then tangible, intangible assets, right? So let's talk to let's discuss a few of them in detail. Okay, now come to income. So what is income, right? So if we see, okay, Now let's come to the income. So what is income? It is actually the revenue generated from the ordinary course of business. And expenses, it is expenses incurred in the ordinary course of business. So what is the actual, what is whatever we do does the business, whatever a person does the business, and in running that business, if and revenue generated, we call it as income, and expenses we call it, and whatever the expenditure is, we call it as expenses. Then coming to gains, so gains are actually is increase in net income that is outside the normal operation of the business, right? So what does it mean? Let's understand it with an example. Suppose a company or a proprietorship, they are dealing in the selling of furniture, right? So what they does, they sell chairs, tables, so on and so forth, and other furniture item. And while running the business, they have also kept a refrigerator for cold water, cold drinks, etc. So now, if you see that when we are selling the various products like furniture, which is the product of the main product of the proprietorship or the company, for any matter of say easiness, right? We call it as company at this stage. So if the company sells furniture, which is its ordinary course of business, because it deals in the sale of furniture, it will term as sale. But if it sells a refrigerator, suppose the refrigerator is bought for 20,000 rupees, and after 6 years, now they have to replace it, and after depreciation, the value as of now, the book value as of now is say 18,000 rupees, and they sell for uh, after depreciation, the book value is 2,000 rupees, and 18,000 is the depreciation till date. So out of 20,000, 18,000 is depreciated, so it's only 2,000 which is the book value of that refrigerator. In case they sell this refrigerator for say 3,000 rupees, so they are selling at a gain of 1,000 rupees. That is 2,000 is the book value, and they are selling at 3,000 rupees. So that 1,000 is a gain, and this is not in the ordinary or normal operations of business, right? Because the main business of the company is to sell the furniture and not refrigerator. And the losses, similarly, it's on the losses side. We say which is outside the normal operations of the business generally. But on the other hand, we at times say that okay, losses are the business losses, right? There are certain business losses are there, business has gone down, is shut down, so those are losses. But in general term, we termed is that loss on say sale of a furniture, or in this case for sale on loss on the sale of a refrigerator. So in the previous case, when we were discussing that the book value is 2,000, let's say it is sold for just 500 rupees, so the loss is 1,500. Now asset, next an important term. Asset is an owned resource that can generate cash inflows, right? So this is an so what is an asset? So asset is an item, I would say. It can be tangible, it can be intangible. So tangible is that we can see, touch, feel, but intangible we cannot see, like goodwill is an intangible, software is an intangible, you cannot see a software, right? And intangible, it's like any machinery is there. Wow, right? So what happens, an asset, as we discussed, it can generate cash inflows. Like if we are using machinery, and this is our asset because we are using it for the manufacturing of our items, our goods which we sell, and when we sell it we get revenue from that. And similarly for say goodwill, so goodwill is one of the assets. So on the basis of goodwill, a number of transactions can happen, right? We can generate income from the goodwill on the basis of, if you have heard a lot of time, okay, we can invest in this company because the goodwill is, it has a better goodwill, right? Then next come to liabilities. So liabilities are the financial debts of an entity which it has to pay to another person, share or a shareholders, that results in cash outflows, right? Suppose we have taken a loan from bank. What happens in that case? We have that loan, we have the money, but ultimately we have to return it to someone. in this case to bank. So this is a liability, right? So with this we are just facing to have this particular item in our balance sheet, which leads to a cash outflow. So when we have to dispose, we have to pay this liability, have to pay something, some money. Okay, the next one is the owner's equity. So owner's equity in very simple terms is the net investment of a person in business. So everyone knows that if we have to run a business, we need money and we need some investment, and generally the investment is made by the owner. The next one is the trial balance. So it's a very summarized view of dual aspects of all financial transactions. So in bookkeeping we prepare ledger of various accounts, and it is summarized view of those ledger accounts. So if I say during the year I have 10,000 transactions of sales, which amounts to 1 cr. So I'm not going to, in the ledger I have all those detailed transactions of 10,000 transactions there, but in trial balance I get a summarized view. The total sales for the year is 1 crore, right? So that is the trial balance, it's a summarized view. And similarly for say various expenses, so I have done say salaries, overall salaries, we have paid 12 times in 12 months, and say every time we pay it is around 1 lakh rupees. So in 12 months we are paying 12 lakh rupees. So these are the transactions, 12 transactions will appear in the ledger account of salaries, but in trial balance we have a one consolidated figure of 12 lakh rupees in that relates to salaries, right? So this is a summarized view of that. Then profit and loss account, as we discussed earlier. So profit and loss is a summarized view of income, expenses, gains and losses, and it depicts the net profit or net loss of a entity. Then balance sheet. Balance sheet is a summarized view of assets, liabilities and equity. We just discussed about what are the assets, what are liabilities and what is owner's equity. Then we have cash flows. So cash flows is actually the cash inflows and outflows. So when we say cash inflows, how much cash is coming to the business, and cash outflows is how much cash is going out of the business. Then financial statement, so it is a combined set of profit and loss, balance sheet and cash flow. So all these three taken together, we termed or grouped together, we termed it as financial statements. Then coming to the next one, so next basic term is entity. So just understand, this is a very important concept. So what is entity and what is a separate entity, rather I would say in this case. So whenever you are thinking of a business or looking at a business or doing a business, and whenever you are going to solve any questions, just think one thing, that the entity, the owner is different from the business. So a proprietor who is running the business is different from business, as business is a separate entity. So when we call it as a company in the pretext of a company, so company is a legal entity which is created by law, and it is separate from the investors or shareholders who have purchased the shares or invested in the company, which means that company is as altogether a separate entity, has its own identity, and the shareholders are just holding shares in it. They are not the owners of the company. We call in that way actually when we talk of company, right? Then we have sole proprietorship. So now we are restricting ourselves to sole proprietorship. What is sole proprietorship? Where there is only one person who has invested money in a business, he is termed as this investor, or this that business is termed as sole proprietorship. So there is only one proprietor of the business, that is termed as sole proprietorship. And sole proprietor or proprietor is the person who has invested in a business, and it there is no other person who has invested in business. When we say invested in business, that no other person is going to have share in net profits of the company, rather sorry, not company but the business. So we termed it as sole proprietorship, and a sole proprietor is a person who has invested in that particular business. So partnership, next one is the partnership. So when there are more than one person who are running the business and share the profits in the business, two or more persons, then it is termed as partnership. And those two or more persons are termed as partners who share the profits or losses in an agreed ratio. Okay, so let's restrict ourselves to these important basic terms in this session, and in next session we will talk about the basic fundamental assumptions and the types of accounts that we have, right? So I hope that you guys have understand it. So I tried to explain it in very simplified manner, and if you like it, please like this video, and in case you have any questions, any doubts, just please give in the comments or on the email ID which is given in the description. So thank you very much everyone, and let's meet in the next session. Yeah, bye bye.